So what are the highlights of the full year results you've just released?
Okay, well, thank you very much. It's been a good year. It's been a good year for the company. We've grown for the first time in 4 years on a like-for-like basis, real organic growth on our shows by 5%. But I suppose even more importantly, our focus on the core events is also starting to pay off, because if you look at our top 10 events, we have actually grown them 15% on a like-for-like basis, which is a significant growth, and one that we all should be very proud of. And also our forward bookings going into next year are significantly ahead, double-digit, significantly ahead going into 2018. So in terms of trading and momentum of trading, it is definitely going in the right direction.
And how much of that is down to TAG? How much of that is down to the markets in which you're working?
I would say it's a bit of both. I mean, for sure, Moscow as a market has stabilized. Every single one of our shows in Moscow is in growth. But still, we have very challenging businesses in multiple markets at the moment, through no fault of their own. And in despite of those things, we have, and the company and the people within the company have driven real growth for the first time in 4 years. How much of that is TAG? At the beginning of the year in January, we announced, and we really focused on the sales teams around the world, and we initiated a number of different projects across the group. One was to focus on monthly targeting for every single individual salesperson. We have completely revamped the commission structure across the entire company. That has led to monthly sales league tables. That's then led to Club Elite, and really rewarding performance across the company. And there is no question that has absolutely contributed to the growth on an organic basis this 12 months. And what we've done, and very much is what is the cornerstone of what is TAG, which is effectively saying there is a blueprint for all different practices within the company, and on how to operate an event. And rebooking was one of the first ones that we rolled out. And that has been, it certainly wasn't easy to initiate across the company. But it was, and it's now taken, I would say, now, after everybody can see the benefits of it, it's starting to be embraced across every single part of the world. And we've had some terrific successes already.
And what structure have you introduced in terms of people?
Well, in the past 6 months, since we launched TAG in May, we've really focused on bringing in the right people to drive those blueprints, those best practice heads. So we now have best practice heads from sales, to marketing, to content, to customer service, to operations, to product strategy, and the list goes on. But I'm very pleased to say that here we are in November, and every single person has been recruited for those best practice heads. That's a significant change for the company.
And in terms of TAG, what does the next 6 months look like?
Well, the next 6 months is all about execution. So that's very much tied into our priorities going into 2018. But the first and foremost is trading. We have garnered, I believe, good momentum going forward into 2018, and we have to keep that going. This is absolutely critical to every plan that we have, that trading continues and that momentum continues. The second is the priority for the TAG program is a number of different elements, but the three most critical ones are, one is to put content and really initiate content into our core shows. That will be the most important aspect of the TAG program, because what content does is that it's the one lever that you have to really drive a relevant and more qualified audience, and that's critical. The better the audience that we bring to our customers, the more likely our customers are to stay. So that is very important for us. The second element of TAG is a lead generation program across, again, all of our core shows, and that's ultimately to drive new business. And the third is customer service teams. And those people are really there to focus on new business. As you can imagine, if you're a new business customer, whether you're from a foreign country or from a local market, doesn't really matter. But just imagine you are a foreign company going to Russia or China or Turkey or India for the first time. These are not easy places to do business. The customer service team is there in order to help facilitate their entrance into that particular market. How to navigate the show, how to prepare for the show better, where do they stay, who should they meet, how do they prepare their booth. All these different elements is what customer service teams will help to solve. So those are the three main rollouts of TAG in terms of priorities. And then the third priority for the year is something that we launched recently, and it's called One Show, One Team. And this is absolutely critical. So when there is a team of people working on a particular show, they may be in different markets or different countries, selling that particular country into that show. It is absolutely vital that they operate as a team, that they're all on the same side and that they're all driving for what's best for that particular show. So those are the three main priorities for the 2018.
And so what would your message to staff be?
Well, first of all, a big thank you. Everybody across the company is for the past year have been hearing new ideas, new initiatives about to be rolled out or have been all rolled out. A new vision, a new strategy was only launched only 6 months ago. So that's a lot to absorb across the company. And not only have people absorbed it, but on top of it, they've actually performed to the point where it's the first like-for-like growth in the past 4 years. I mean, that's a significant turnaround for the company. And a terrific momentum going into next year. So the very first thing I would like to say is thank you to everybody across the company. Second thing I'd like to say is talk a little about change, because people always, the new strategies and change, and sometimes it is scary for people to hear about change. But the reality is that the single best companies in the world are ones that expect and demand change. Why? Because we live in a world that is changing at an incredible pace. And the third is how do people benefit from that change? The reality is that they're going to benefit because they have, yes, better tools, they'll have better training, they'll be able to service their customers better, but also on a greater level, it's much more enjoyable for people to work in the company, to work for a company that consistently wants to achieve the best for their customers. And everybody will be working. Of course, we already work on some amazing products and shows across the company. But what we're doing is making these shows even better. We're making them even more relevant. We're making them even more dynamic and more relevant to the particular sector in the industry. And hopefully that's something that's incredibly rewarding for everybody that works across the company. But ultimately, a big thank you. Good morning everybody, or good afternoon, depending on what country you're in. We're here now live. You've obviously seen the video. I'm joined by Andy. We're actually being filmed live at FTI, who are our financial PR company, as we go around the city talking to our shareholders about our results of last year. So welcome everybody. I hope you all enjoyed the video. And now we're going to have a sort of series of live questions and answers. So please feel free to ask any questions that you want to about the results, about the TAG program, about the strategy. With pleasure, we're here to answer some questions. So please fire away. I think we're being simultaneously translated as we speak, and your questions will be translated as well for us. So as we look for questions coming through. There are already some coming through. Okay, fantastic. So one of the questions we've just got is, you talked today and in May about moving to a more centralized structure. What does that mean in reality? So yes, so the whole of the TAG program is very much about how are we evolving as an organization from what is a decentralized business. And what I mean by that is at the moment, ITE, and not just ITE, but many organizers are structured this way. They're structured very much that every single region and country runs completely independently than another. That means that all of our shows are at different standards depending on a different market. So everybody does things differently. I believe, and the reason of the TAG program, the entire evolution of our strategy is very much saying is that is quite an old-fashioned way of running events. We now can run events one way across the world, exactly the same. So all the operations that go behind the actual exhibition itself, from how do we sell, how do we do content, how do we do the operations, how do we do registration, and so on, can be one way all across the world. So that's what I mean by a centralized structure. And that basically means that we are and have hired a series of best practice heads from sales to marketing content, to lead generation, customer service, and so on. And it's up to those heads of best practice to basically say, what is the best way that we can do this? And take already some great examples coming from the company and also great examples happening around the world, and basically saying, this is the best way that we can actually operate an exhibition. Then it's up to each local market to execute. So that's what we mean by centralized to decentralization. So it'll still be run by regions, but they will take the best practice and then execute it in their local market. So that's the first question.
There's a question here on the 17 results. So what has driven the growth and how have all the regions performed? So in terms of the FY17 performance, presumably. So just to recap on those revenue numbers, overall growth for the whole group is up 14% top line growth. But that does include acquisitions and FX gains. More importantly, on a like-for-like basis, we've delivered a 5% revenue growth, which is the first period of like-for-like growth for 4 years, since 2013. So it's a really, really pleasing set of results for us to present to the city this week. Also, really importantly, is our top 10 events that have grown by 15% on a like-for-like basis. So it's really pleasing to see early effort and investment into our core shows is paying back with that strong growth from the core events. Across the regions, it's actually quite mixed. Most of that growth is driven by Russia, where we saw 14% growth on a 9% volume growth. So both volume and yield growth across Russia, which is great. Recovery after the last few years. That's mostly driven by the core events in Moscow, although there are also some of the core events out in the other regions that are also helping drive that growth. Across the other regions, it's actually quite mixed. So, of course, with Russia growing at 14%, but overall growth at 5%, that means there are declines in some other markets, and it is quite mixed. So, very quickly by region, across Asia, most of our core markets actually are in marginal decline. Across EMEA Plus, fairly mixed. Turkey actually had a very tough year at the start of the year, ended up in a small decline, but actually a really strong second half shows and good trajectory into next year, which I'm sure we may touch on a bit later on. Ukraine continued really strong growth as we had last year. Across Central Asia, again, very mixed. So Uzbekistan, very strong. Azerbaijan, in decline, so a mixed performance in Asia. And then finally brands, which is AOW, Moda and Breakbulk. Breakbulk, although there's only really the main event was Europe, we didn't have the American event this year because of timing of the event, but the European event grew really strongly, double-digit growth. Both Moda and AOW declined in the year. So actually quite a mixed story across the whole geography, but really driven by the performance of the core shows in Moscow.
Very good. Okay, the questions are coming fast and furious now. So what is the reaction of the investors? Well, probably we could both share this one, but I think generally the reaction has actually been incredibly positive. In May, after we did, at the beginning of the year, we did the review of the entire business, which was led by Raki Williams, and involved many people across the company. When we announced the new evolved strategy of the company in May, and then the massive investment going into TAG, and just to point out, this is the largest single investment by proportion ever in the exhibition's history into the organization, into the actual core business. So it's a substantial investment. The reaction of the investors has been very positive. It's been very supportive. Why? Because the plan and the strategy was incredibly clear. We believe it was well delivered, and it made a lot of sense and resonated with a lot of the investors, and it was something that they felt that they would back. So actually, it's been very positive.
I agree. I don't really have too much to add. I think you're right. I think we messaged it very well 6 months ago. I think people appreciate the guidance we've given them, and we're doing what we said we would do. So they're very supportive and continue to support us on the TAG program.
Yeah. What was the easiest and most difficult challenge you faced in the last year? Okay. Well, we can both do this as well. But the easiest was the decision to focus on sales and marketing. That was the easiest decision and challenge, actually, in the sense that, Our company has been very much reliant on acquisition for the past 10 years. So to focus the business on on our organic growth, on sales and marketing, was by far the easiest decision that we made. It was probably the biggest challenge as well. Yeah, to shift the mentality of the organization to really focus on sales and marketing and less so on acquisition or launch was a significant shift, I think, for the business. And I have to say, it's thanks to everybody that's listening, and those of you probably already out seeing customers, but everybody in the organization for embracing that change has been terrific and very clearly already showing in the results of the company. So that's probably what I would say in terms of the easiest and also at the same time difficult challenge of last year.
I can definitely share a difficult.
Yeah.
I think availability of data has been a real challenge. So we wanted to come up with a new strategy, present it to the market, understand how the shows are performing, what we need to do to improve them, etc. But actually just trying to gather the data that we need, the historical data, to be able to make better informed decisions going forward has been a real challenge, I think, which I think was a lot of what the TAG investment will help us have the systems and the processes to be able to capture data that will make us help us to make much better informed, insight-led decisions on how we run the business going forward.
Okay.
That's typical of me, isn't it? Just to come up with a negative.
No, that's all right.
I think it's something positive.
You've got time. You can come back to that. What is the biggest risk to delivering our strategy in 18? The biggest risk, execution. I mean, ultimately, it's engagement across the various markets in order to drive through the initiatives and the TAG program. So the biggest risk is ultimately it boils down to mentality. Yeah, it's mindset across the group. Many of the initiatives that we're driving are ones that I've been very lucky enough to be involved with before. I know they work, but so it's mindset of everybody in the organization to really open their minds and saying, well, maybe there is a different way that could be better. It doesn't mean that what we've been doing in the past is bad in any shape or form. It's just different. So I actually think the biggest risk is mentality across the organization. But I would say, our first initiative that we launched across the company was the Rebook initiative. And that has been terrifically accepted across the group. And I think everybody is seeing the benefits of this. I haven't seen one rebook that hasn't worked across the company. And we're talking across every different market, from Russia to Central Asia. India has just done their first rebook just 4 weeks ago. Malaysia, Turkey, Shanghai. Every single part of the group has now taken on board the Rebook initiative. And I think the results are coming through as terrific for the business, but really actually it's terrific for our customers. Because the earlier that they book, the more time they have to prepare in order to exhibit successfully, and more time we have to focus on new business, which in turn gives them more time to get ready for our shows. So it's been universally well received.
I would say there's also a risk in terms of the underlying performance of the business as well, because we can't deliver our strategy, which requires the TAG program and therefore the TAG investment, unless we continue to hit our underlying numbers. So if we're not hitting the numbers, we will potentially lose the faith and support of our board and our shareholders to continue that investment program. We'd need to curb it. So it's absolutely crucial that while we're focusing on the TAG program, we do not take our eye off the underlying performance of the core shows and continue to deliver our budgeted numbers. It's crucial.
Yeah. What is the strategy in regard to shows which are not included in the top 60? Look, very good question. Thank you for asking this. The strategy is exactly the same as it has been before. It is absolutely business as usual for all the shows that are not in the top 60, which I know is not easy sometimes for people to hear, and it might cause some confusion. The reality is that what we're doing with the TAG program is that we're investing the money into shows that have the greatest capacity for growth. Because every penny that we put in, we have to give a return to our shareholders. And that is, by choosing the top 60, those are the ones that have the greatest capacity for growth. Now, that does not mean that the other shows are not important. It's quite the opposite. It's just those are the shows that are basically business as usual. We are not stripping it of any form of investment. It will just continue as they have done in many years past. Yeah, so it's very important for everybody across the company to know that anything that's not in the top 60 are still just as important as those in the top 60. It's just the investment are going into the bigger shows because they have the greatest capacity to grow faster. Yeah. So thank you for asking that question. And this is for you. When will the financial structure be centralized?
Yeah, I'm not entirely sure I understand what that question means, so thanks, Mark. I guess the question is, in terms of most of our functions being centralized, what are the impacts on the finance team? If that's not the question, apologies, but that's the question I'll interpret from that. So we still will have the regional structure as we do have with the FDs and the local markets reporting into those regional teams. We will have more harmonised ways of operating and running our processes. We'll also have harmonised systems in time through the TAG programme. I know a lot of you have probably met Agnes on her roadshow around the world. She's been understanding what our current control framework is. So we will be harmonising controls and processes probably in the next 9 months or so. We'll then be looking at potential vendors for a finance solution at the back end of FY18. So that will probably impact into 19 before we have harmonised global systems. So back to my point on data, it does make it more challenging in the short term to gather all the data we require. And I know that's for the finance teams and the event guys, that's quite a challenge at the moment to gather that data, but the systems and processes will definitely improve over time through the TAG programme.
How has the competition reacted to our strategy? Well, for most of you that do know me, I actually don't pay much attention to our competition. I think I don't even wish them luck. I mean, what we are focused on is actually driving the performance of our own shows and delivering a better product for our customers so that they come back and then we can drive new business on top of that. What I can say from what I hear is that the competition are looking at us in slight awe, if you want to know the reality. Most of them, this is quite a bold strategy to really focus on the core business. Most of our competitors do what I consider is the easier thing, which is just buying their way out of trouble or just buying products rather than focusing on their core products. So that's all I can really say about our competition. May I ask, what's the main judgment for the sales staff to join the elite group? So this must mean about Club Elite. So Club Elite is a program that we started originally with purely for salespeople and sales leaders, and that is always based on, it's every quarter, so every 3 months, and it's based on performance over target for an individual salesperson. And that's judged every single quarter. That's for everybody across the group and any single region that they are entitled to be judged for Club Elite. Same with the sales leaders. We have recently opened that up to all parts of the company, from marketing to support staff. So every single person across the group can be part of Club Elite. And that happens every quarter. And then there are also annual prizes, which are holidays, which go to the top salespeople for the entire year, as well as 2 CEO awards, which can be for outside of sales and marketing. But if you have any questions, the best thing to do is ask your line manager or your regional director or your head of country, and they can go into much more detail about Club Elite. Or feel free to ask us directly. So that's Club Elite. There's a lot of focus on sales and marketing. What role do you see for those of us in other functions? Well, very fair question. I mean, a lot of people have asked, why have I focused so much on the sales to start with and then marketing? And we've had to start there because sales and marketing are the people who are the ones who are actually on the front line of talking with our customers. So it's absolutely vital to start with the sales and then also marketing. Marketing are the people who, especially as we invest in lead generation, are driving new business, but also ensuring that we're bringing better quality visitors every single year. So we've had to start with sales and marketing. But actually now we've spread out not just Club Elite, but also training programs across every other part of the business as well. And you'll see with the tag investment, the three key areas that we're really focusing on in the next year are content, and that is to drive a better quality audience. So these are like speakers, technical seminars throughout all of our core shows. We're also doing lead generation and then customer service as well. This is one for you, Andy. What have been the standout achievements in finance, and what are your goals for the next 12 months?
Do you think that means the company finances or the finance team?
Oh, I think, how about both?
Which way shall I
How about both?
Well, let's do finances of the business. I think is quite easy because I summarised those earlier. I mean, achieving like-for-like growth is fantastic. We're well on track in terms of the tag expenditure, so that's all within budget and on plan. During the last year, we also refinanced our debt package, which was a great achievement. We needed a new debt package to help fund the tag programme and allow us to make any potential acquisitions if we want to over the next few years. So that was quite an achievement. A few of my team worked really hard on getting that in place. And also the visibility next year. So the success of the on-site rebook, to be able to go to the city this week and talk about the visibility we have into FY18 is fantastic. So I think those are some of the financial achievements in this year. In terms of, let me just twist it around in terms of finance team. Some of the achievements, I think as a finance team, in terms of the data we gather and now report, is a whole world ahead of where it was a year ago, and everyone worked incredibly hard to achieve that. So we have much more data now on the on-site rebook process. We have rebook statistics, we have renewal rates, we have customer growth rates, all data that we didn't really have on our top shows before. I think we've massively improved our management accounts. Our regional board processes and board packs are now, so much more improved from where they were 6 or 9 months ago. So I think the quality of data and reporting has improved immeasurably. Having said that, going into next year, I think there's still huge room for further improvement. We're only capturing that data on a select number of shows. We need to see it for all of our core shows. We need to be seeing more how that data is being used to make decisions rather than just gathering data to assess historic performance. We need to actually feed that into the strategy decisions about how we're going to change what we do on the shows with the data we gather. So I think in the future, the next year in terms of the finance team is all about capturing that data more regularly and using it to make business decisions and making the finance team more commercial partners or business partners to the event directors and the managing directors around the group. So I think that's a key focus. And also, as I mentioned earlier, all the controls and processes harmonisation in the next year. It's also a key focus for the finance teams.
Okay. Can you talk a little more about the blueprints? What do they look like and how do we implement them? Okay. So the blueprints are work that's being driven by each head of best practice. So a little bit, I actually have a few here live. So these are just some of the ones that we have. So we have blueprints for on-site sales, for lead generation, for new business, for yield management, for visitor acquisition, for rebooking, and for product strategy already. These have literally just been launched at a recent sales and marketing conference that we did for the core shows. These are now busy being translated and ready for the beginning of next year. They will be rolled out basically region by region through a series of one-day events within that particular region or country. And then much more detail will go into what does this actual blueprint mean, how will this then affect, how will you then work within that blueprint. But I'm pleased to say that the heads of best practice are doing a great job and we are on track with the blueprints that we wanted. Okay.
I can touch on that share point there. So are there any plans to offer staff any share options either as part of annual salary or voluntary employee schemes? Can't really give you any full details on that, but what I can say is Mandy is actually and her team are actually leading a review of our total reward packages at the moment. So there'll be more news on that in the coming months. But we are looking at what the right level of incentivization is, what the right mix of base pay, bonus, share options, etc. is. So there will be more news on that in the coming months, but unfortunately I can't share any of that with you at this time.
Okay. Does the group support the launch of new projects, or target is only the existing projects? Okay. We do support the launch of new products, but we have to be very clear. At the moment, the focus is on our existing business and our shows themselves. And that is actually the priority for certainly for the near future. Then the next natural question is why? I believe that the company's heritage has always been based on launching new shows. I just think that the world has changed. I think now many organizers are consistently looking just to launch. And by doing that, they actually forget about their core products. So I think the simple answer is that we will look to continue to launch new shows only if there is a clear customer proposition. And what does that mean? That means, do we have a core group of customers that actually want that show? Or are we just launching it because we want to make quick revenue? If that's the answer, quick revenue, we have no interest in those type of launches anymore. Yeah, that is not why. We don't want to be that type of company. Yeah, so it's only if there's a core group of customers that want that actual show, and then are we prepared to invest substantially in that launch to really make it succeed? Those are the sort of criteria, simplistically, in terms of new launches. But clearly, for the near future, all the TAG program is absolutely invested in our core shows that we have today, and not on new shows.
I think, Mark, what you've just said actually addresses another question coming through on cancelled shows. So we did announce this week that during the FY17, we cancelled 37 shows. But for all the reasons you just explained why we wouldn't launch, those things are the reasons those were cancelled, because they didn't meet the criteria that you've just set out in terms of a viable proposition to a customer need. So those just weren't likely to grow for us. They were very small scale, and no effort would enable those to grow. So that's why we cancelled 37 of our shows this year.
Yeah. How can this new commission scheme stimulate our staff? I'm guessing that this is predominantly on a sales commission scheme. Well, if you're a salesperson and you're truly a salesperson, this should be stimulating, because basically you're given more chance to make more money and more commission than you've ever had in the past, based on your performance. So these brand new commission schemes that we rolled out earlier in the year are completely targeted to individual performance, and really giving every single salesperson a chance to make much more money for over delivering or over and above their target. So it really should be stimulating for you. I mean, and the reports that we hear across the company, for those who have really embraced it, it is incredibly stimulating. So I'm hoping it's shared across everywhere. There's more for you. Is servicing a debt a burden on the cash flow? Do you want to answer that?
I can't.
Okay.
Read all of the question.
Can you just scroll down a bit? The last one, yeah. Is servicing the debt a burden on the cash flow, which might impact funding improvement of expos which have potential? Okay. So are we paying down debt and that stops us from investing?
Yeah, fine. Well, firstly, although I mentioned earlier, we've got a new debt package. This business for the last 3 or 4 years through the acquisitions has always had debt. It's refinancing, so it's just replacing and setting up a new debt structure with a new series of banks with new terms. Actually, those terms are better than before, and it's actually slightly cheaper. So, if anything, it allows us slightly more available funds. The amount of debt that we have as a business is actually very comfortable. So I won't bore you too much with technical details, but the level of our debt versus our profits is in a very reasonable band compared to companies of our size and scale. So we don't have an undue amount of debt burden on our books. And in fact, the new refinance gives us a little bit more headroom to invest back in the business if we need it in the future. So there is no concern with the level of debt we have. The burden of paying back that debt does not affect our achievement of our plans.
Okay, I think we're sort of getting running out of time, but we have time for maybe a few more questions. So, what are you most proud of from the year gone by, and or what has been your most enjoyable moment from the year gone by? Okay, so that they're both, I suppose, tied in. So maybe I'll do one and then
and you can do one as well. So what are you most proud of? Genuinely, I'm by far the most proud of is how much engagement we've had across the business with all the changes of strategy and evolution of strategy, the launch of these new initiatives. I'm incredibly proud of the reaction of everybody across the company. You know, sometimes change is quite difficult. People get set in their ways, and they don't like to adapt to new ideas because it's uncomfortable. That's it. That's all the reason why people don't like change, is because it's uncomfortable. I have to say I'm incredibly proud of actually people's reactions to a lot of the initiatives that we've been rolling across the group. And the most enjoyable moment, well, there's been a lot actually. You know, I've really enjoyed the club elites. For me as a chief executive, there's nothing more inspiring actually, even for myself, is to share people's successes that they've done across the company. So either going to the shows or actually at the club elites, it's something that I've really enjoyed personally.
In terms of proud, actually, I don't want to copy yours, Mark, but I absolutely agree with you. It's how people have reacted to the change. I've been through these sort of changes before, and it's often very mixed. People can react negatively, think we're criticising the past, which we're not. We just want to take us forward in a new direction, evolution of the business. So how people have embraced that and got excited by it. So even within finance, I talked earlier about all the data we're gathering now. People, it's starting to get into people's head. This makes sense. I know why we're capturing this data. I know how it can help us, rather than just the chore of pulling together data. So I think it's really exciting to see people how people are growing and stepping up to the challenge.
Yeah.
In terms of, question's gone, but it was the most enjoyable.
Most enjoyable. Yeah.
I mean, that for me, just simply because the first 6 months were so hard working with Raki and her team and some of the senior finance guys on getting to the strategy presentation in May.
Yeah.
Just the achievement of having that signed off by the board and presented to very good reaction from the investor community was an amazing moment. It was really good, and it felt like that was the starting point. It was. Yeah. I know your analogy of getting to the starting line and off out of the blocks this year. That's what I feel. So it's really exciting to have finally got there. And there was so much under wraps up until then as well. So we could finally reveal our plans to everyone. So that was a great moment for me.
Yeah, I agree. So I think we probably have one more question. I think I saw one up above that says something about 18. We've got lots of questions.
So what's the outlook for 18?
So okay, well maybe we can both sort of touch on this. We enter 2018 with terrific momentum. I mean, many of you would have seen it in the results, and probably I touched on it in the video. We have got genuine momentum thanks to what everybody's been doing across the company. You've really embraced these initiatives of driving our sales forward, and that has given us great momentum going into 2018. I mean, our sales are just shy of 100 million. It's 98 million compared to 81 last year at this time. So that's 20% ahead as we go into 2018. The outlook, we can't really talk too much in detail about numbers, but what we can say is that, you know, it's shaping up to being a good year for us in 2018. I mean, if you look at where we've come from in this time last year, there was demonetization in India. There was terrorism and quite a lot of issues in Turkey politically. Russia Moscow. We were using the word stabilizing because we weren't. The market wasn't quite sure if it had hit the bottom. You know, there was a lot of uncertainty this time last year. Now, where we look at where we are today, going into 2018, you can clearly say that Moscow and Russia has stabilized. The Russian government is predicting good growth, GDP, for the next year. And as everybody knows, that once Russia starts to recover, then that does tend to spread eventually into the Central Asian regions. We feel that there is more stability in Turkey. Obviously, it's still quite difficult, but it is certainly more stable. India has also become much more stable post the demonetization. So in all of our markets, the outlook is better than it was 12 months ago. So that added with the momentum that you've all created, I feel actually very confident for 2018. I think we're in very good shape, especially as we look to roll out the TAG program.
I think that's a perfect summary, Mark. I've got nothing to add to that. I agree with all of that.
Okay, I think we are running out of time. So just to close, I think on behalf of Andy, myself, and all the leadership across IT, we genuinely want to say thank you for all your hard work for the last 12 months. It has been a significant year for us, 2018. And as we roll into 2017, as we roll into 2018, just really a reminder of our three main priorities. The first is if our focus on trading. We have to continue this incredible momentum that you've all built up into this year. Why it's so important is because this is the biggest year of TAG investment is actually going into 2018. So trading, we must maintain our trading levels in order to give confidence to everybody to keep rolling out all these initiatives over the next 12 months. So that's the first, is trading. The second is we've got three main priorities within the TAG program itself, which is content and ensuring that we put the relevant content into our core shows next year. It's also on customer service, is creation of those customer service teams to largely focus on new business. And thirdly, it's the lead generation teams who will really help us to drive new business into our shows. And then the third priority, which ultimately is the biggest one, or let's say equal with trading, is one event, one team. Yeah, it is impossible for us to really maximize our potential if the teams are not working together across the world. So one event, one team is a vital priority for us over the next 12 months. But apart from that, I just wanted to say this, and I think on behalf of Andy, that, the next 12 months, it is the biggest proportion of our investment going into TAG is these next 12 months. It is the largest investment in by proportion in exhibition history going into the core operations of a business. So we're very excited about our prospects for the next 12 months. And really, thank you all again for your hard work, and we ask for it again for the next 12 months. Okay. Thank you all very much.
Thank you. Thank you.